Hello, my name's Iggy Tan. I'm the Managing Director of Altech Chemicals, and we've got a very exciting project in Europe, virtually Saxony in Germany, where we're actually cracked the silicon code. Companies have been trying to resolve the problem with incorporating silicon in the anodes of lithium-ion batteries. We've cracked that silicon code. We've allowed silicon to be incorporated in graphite, which last year we announced a 30% higher energy density battery, which will be a game changer for the lithium-ion battery industry. And we're very focused on Europe. We think the growth or the story about the lithium-ion battery will be about Europe in the coming decades.
Thanks, Iggy. We also have an exciting project. My name is Joel Crane. I'm an Investor Relations Manager with Cobalt Blue. We're developing the Broken Hill Cobalt project just outside of Broken Hill in Western New South Wales, Australia. And this project is unique in the sense that it is a pure cobalt mine, as opposed to what cobalt is usually comes with in association with copper and nickel. We're going to produce around 3,500 tons of cobalt per annum, which is about 2% of market, so a fairly chunky size mine in the global scheme of things. We're also quite focused on Europe, given the same dynamic. We see the same dynamics that Iggy pointed out, that it's really in the forefront of lithium-ion batteries. And we're getting the most traction with auto companies there who are very keen to secure ethical and sustainable sources of cobalt, obviously a key component of the cathode in electric vehicle batteries.
Well, you mentioned the process that cobalt doesn't come with nickel, and what is the deposit?
So the deposit is a sulfide pyrite, which is quite unique, at least in the sense of what is normally mined, particularly in Australia. It has pyrite being fool's gold, it's heavy iron content, relatively low minerals content, but we have a process, our team of experts, technical experts, have this particular experience of being able to liberate minerals from pyrite resources.
Okay, and so guys, so thanks very much for the introduction to your companies. Obviously, both companies have been on here previously. We'll put links below so you can sort of dig into it a little bit deeper. But the reason I wanted to get you guys together today was trying to understand what's happening with this European ecosystem, which you both managed to insert yourselves into. You guys had choices. This Australian companies have got choices. You know, Asia is clamoring for what you've got. So's the US, so's Europe. So why pick Europe? And what support are you seeing there from either OEMs, battery manufacturers, or indeed the kind of the European sort of taxonomy of battery metals? I mean, Iggy, why Europe?
Well, I guess it's fair to say that the lithium-ion battery story has been about Japan, Korea, and China. But we believe that will shift quite dramatically to Europe, and all driven from EU regulations. I'm not sure whether you're aware, but all car manufacturers need to achieve an average of below 95 grams of CO2 per kilometer for all the cars they manufacture. So, and that's the reason why diesel cars are virtually being phased out of Europe. And in order to meet that criteria, most of their fleets have to be electric vehicles. So companies like Volkswagen, BMW, Jaguar, and so on, they've announced that by 2030 or by 2035, they will go all electric. So you won't have an opportunity to buy a combustible engine car in Europe from that point onwards. And the reason that they're moving towards that is they potentially can get fined 2,000 euros for every car they sell that if they don't meet that overall standard. So there is a big incentive to actually move to electric vehicles. And what we see is there's some 600 gigawatts of battery capacity being announced to meet that demand. Companies like CATL, Tesla, Samsung, etc. And so our view is we need to be in Europe because Europe has very plainly said they want all their raw materials to be sourced within Europe. They want to be less reliant on Asia for all that raw materials. Joel?
Yeah, we see very similar dynamics. It's obviously the legislation that's really led to a much more dynamic market in Europe. And that just leads to the actual producers of these EVs being a bit more progressive, I'd say, than other major markets around the world. So, and in our case, raw materials, it's a new sector to auto companies. They've never really had to think about this before. They relied on, from the battery point of view, the battery makers just to do this. But now, because the world is asking for either materials that are sourced domestically or is from close a distance as possible, but also from ethical sources. So in cobalt's particular example, there's not a whole lot of cobalt in Europe, and they'll never be able to service the entire auto industry. So they're going to have to look elsewhere. And they certainly want to do that. They want to source from places that aren't problematic. And cobalt is a quite problematic mineral in that most places that it's sourced have had, I guess, ethical issues in the past, namely things like child labor and not very well environmentally sourced material. So that's where we provide an alternative. We will be ethically in source, and given that we're a new mine, we'll obviously have the highest environmental standards, and that really attracts those European customers. They're getting in touch with us. We don't have to do much reaching out these days. They're coming to us, and they want to discuss how do we get these type of tons as soon as we can.
Yeah, if I can add to that, Joel, the importance of being green. Our project has been certified as a green project out of Norway with a group called Cicero, and that's actually very important for a supply chain in Europe. All our power supply will be from renewable energy, and because of the green accreditation, as you say, a lot of the downstream customers and also investors are looking for that green credentials.
But here's
absolutely.
So, Joel, if I may, because it's bursting to ask this question. So you kind of laid it and said, well, here's this kind of European ecosystem. Green credentials are important to us, and people want to do things the right way. But the other side of that coin is that you guys have an obligation to your shareholders to get the best financial deal possible. So is Europe incentivizing you financially in terms of making it easy to get finance, get access to capital, whether it be whether they kind of reduce tariffs or any other kind of incentive to say, well, come here rather than go to Asia, which would be just as easy for you? I mean, how do you balance that decision making, Iggy?
Yeah, so we are situated on the east part of Germany, and the prices of labor and utilities are very competitive. So there is no point in actually building this plant in Asia, because the source of the materials, we buy graphite and we buy silicon from the market. And there's no point buying that and then shipping that finished product from Asia to Germany. Essentially, we buy graphite from a European graphite producer, and we buy silicon from a European silicon producer. It's shipped into East Germany. We do the magic and the coating, and we produce a aluminum anode, which then supplied within Germany. So it's actually the perfect spot when you don't need a deposit. I'm sure Joel has a different problem because there's not a lot of cobalt deposits in Europe, so you have to start in wherever it is.
So go on, Joel, answer that one, because your cobalt's coming all the way from Australia. So why does it make sense for you to be in Europe?
Well, it's really those incentives that Iggy touched on in his remarks earlier, that by 2030, 35, we have a number of different mandates, both from Europe legislation itself, but also self-enforced by the automakers themselves. So they need to source green, ethical material by certain dates, and we will fall under that. yes, we will be shipping all the way from Australia. So there is, with mining, there's always going to have a component of carbon emissions and this sort of thing with the transportation, or scope 3, as it's also known in reporting. But I guess it's given that there aren't enough cobalt deposits in Europe, it's going to have to come from somewhere, and we sit at the top of the list of best choices in that sense. So it's really that it's the European legislation and the mandates imposed by the automakers themselves to get as green as they possibly can.
Right, but so far what I'm hearing from both of you is it's the right thing to do. In your case, why move graphite or silicon molecules further than they need to be transported? And for the end user, it's good news. But I want to come back to your bottom line. What are the things which make it good for your shareholders, for your company, in terms of incentives out there and things that will affect your bottom line? What's Europe giving you? What can Europe give you?
Yeah. So as I mentioned, the competitive price structure. We also will access grants that are available. Much like the EU are very focused. Now, to just give you an example, in the area that we proposed to build the plant was a lignite power facility. And so the EU have allocated billions of dollars to shut down the lignite industry, which is a poor form of coal virtually. And so there's a lot of money swirling around to support industries that will can be built within the state and to drive the electric vehicle or the renewable energy direction. So that's what we see as a very positive benefit. We have already been allocated some grants, and we will be looking to access more grants by having the plant in Europe.
Right. Okay. And I guess for you, Joel, same question. So, and I appreciate that conversation about lignite, Joel. Iggy, brown coal, very inefficient and, very, very dirty. So, I can see why they want to replace that. But Joel, for you, same question, because, what the end user benefit is interesting, and we've all got to follow ESG compliance and guidelines and all of the other things which the EU wants to see in place. But again, you too have responsibility to your shareholders. So what's the benefits to your company in being in Europe?
Well, being a commodity that's priced in US dollars, it doesn't really matter where you sell. The only difference is, of course, is the freight cost and then the carbon components of that freight. Given that cobalt is a very high value product, it's shipping it is the distances are obviously a lot less of an issue than if it's something like a big bulk product like iron ore or something. But for us to, as discussed before, there's so much progression happening in the European auto and battery making industry. It's good to be a part of that. For example, Volvo and Norvolt are teaming up to build a battery producing area in Sweden next to the Volvo factory. So in that sense, yes, we ship the cobalt there, but then the battery and the car manufacturers are right next to each other. So you're getting that domestic input or advantage, and just being part of that type of leading edge technology and being involved with some of these companies that are there. That's what I think our shareholders will be very pleased to be a part of.
Right, but for you, Joel, we've discussed in the past with you and also with Joe separately about the kind of opaque nature of the pricing of cobalt in this market, and I buy your thought that these car manufacturers want ethically sourced cobalt for sure, but likewise we've also had conversations about cobalt being designed out of some battery use cases. So how does all of the above affect your ability to kind of set pricing? Do you see this, specifically the cobalt market, given what the EV sector is doing, being able to charge a premium for this ethically sourced cobalt?
Well, as a miner, very difficult to have too much influence over the actual price when it's done on an index basis like Cobalt is done. However, I'm glad you brought up the green premium, because it's a question we get in virtually any meeting that we have. Will there be a premium market for this particular commodity? And our answer is, I certainly think there will be. There already are premium markets in the more liquid commodities, such as copper and aluminium, where the LME is designing premium, green premium contracts for those ones. And I just think that there'll be a time very soon when customers, people at car lots, will be asking, where was this, where were the raw materials for this product sourced? And you'll be able to say, and point to a list saying it's come from these sort of areas. And in order to have that privilege of being a responsibly sourced area, you're going to have to pay a premium for that product, particularly because it's in such high demand. So it's that tension within the producers, the consumers, and their customers that is going to create this green premium that will be at the top of the list of.
Right, and Iggy, I'm intrigued by what your answer is going to be, because you're not selling a commodity. You're a chemicals company. You're selling a technology which has super enhanced benefits for automotive manufacturers. How on earth do you work out what you charge for your product?
Yeah, so essentially what we're doing is we're adding some super active materials to graphite. And so if you can produce a graphite powder that is now double the energy capacity, the market has said that they're prepared to pay the same energy unit as graphite. So what that means is that if you can produce a super graphite that has double the energy unit, they're prepared to pay double the price, but essentially the unit price is actually the same per energy unit. So we have some targets for pricing. The question of whether it's you get a premium for being green, I think it makes you competitive, and products that don't have that green tag are going to be under pressure. So you might not get a premium, but I think you will capture the market, particularly in Europe, and that's what is required. So if you're not green enough, you're not going to be in Europe. That's simply the answer.
Okay, so Joel, here's one for you as an ex-banker, right? We investors sitting outside looking at the market at the moment, just going, what on earth's going on? Everything's on fire, not in a good way. Stock is being hammered across the board. Doesn't matter what sector you're in, what vertical you're in, it's getting hammered at the moment. People are nervous. It's risk off, cash in hand, waiting for something meaningful to change. With the conversations you're having with battery manufacturers, automotive manufacturers, and even some of your financial contacts, how are they viewing this? Are they pausing for thought?
No, that is the short answer. They are medium to long-term focused, meaning the next 5 to 10 years, and they are scared. They are doing the work. Auto companies are hiring.
But they're not scared about the market, Joel. What are they scared of?
They're scared of lack of supply. They are afraid that there's not going to be enough, at least the material that they want to get. So they are, we're sitting in these meetings with procurement managers saying, and they're quite honest and they're frank, they're saying, look, by 2024, 26, we are out of contract and we don't know where we're getting our next tons from. So in that sense, a sell-off like this is certainly scary, also seasonal. But in the medium term, it won't even shake the tree for these guys. They're very concerned about securing the next decade's worth of tons. Okay,
so the market is kind of is a temporary thing for them. They've got bigger concerns about how this pipeline of commodity supply actually hits their doorstep. I mean, Iggy, for you, you're in a disruptive technology, and the trouble with disruptive technologies is there's always another one coming up behind, right? So what are your potential customers nervous about? What are you nervous about? And is it the market?
Yeah, so just to the question about the markets, I mean, I knew this was coming. I mean, when we had periods of time when government were printing money and the interest rates was close to negative in Europe, this has got to come back at some stage. So for companies like us, unless you're trying to raise money and you've run out of money, yes, this will impact on you. But we're cashed up. We've got 11 million. We've got enough money to. We purchased the land in Germany. We've got now enough money to commence the pilot plant construction. So we're committed to get the pilot plant up and running. And the reason for that is to get commercial samples, to get it to our customer. And I'm sure Joel will have the same thing. The end customer wants samples so that they can go through their qualification process. And we know when the customer is a automaker, the qualification process is very intense and lengthy. So the sooner you can get that process underway, and it could be while you actually raise the money for your project and construct that project, you could run that qualification process in tandem rather than finish the qualification and then start your project, because they will want more and more samples as you go along. So Joel's right, exactly. If it's a material that they want, they're very interested in it. Whatever the market's doing is whatever the market's doing. They want to get their next factory up. They want to get their next battery factory up and so on. That's what they focus on. Whatever the market doing doesn't impact on them. I mean, they're pretty well cashed up. So,
but you think on that basis that anyone involved with the battery thematic should be immune to market conditions, but they're clearly not, because well, certainly the public companies anyway. People are nervous. But sorry, Iggy, I just want to push you on this point. Disruptive technologies are great because they come in and they usurp or become the dominant thing for a while, right? You've got competition coming from other technologies trying to deliver what you're doing here, and then there'll be an onus on you at some point to kind of move to the next level. In terms of the R&D component, are you going to see much support from the OEMs, or is that you have to stand on your own? I mean, how much of this is partnership going forward for you?
Yeah, so the partnership is very important. So we've got offtake contracts, supply offtake contracts with SGL Carbon and Ferroglobe. We've got 2 NDAs with German automakers, and we've got an NDA with European battery companies. So that chain is very important. And so the other question is being a disruptive technology and leading the way. The key is to be quick to market. And what a lot of other companies do, they tend to focus a lot on research, looking for somebody that can take that technology and then commercialize it. And that's a very long process. What we're good at is actually commercializing the technology while we develop the technology. So whilst we've got success in the laboratory, we haven't waited to get more success. We've already bought the land in Germany. We've completed a pre-feasibility study, and we've also now allocated funds to start to build a pilot plant. Now, that's the key to getting to market quickly and establishing your footprint in the market. Yes, you're right. You're always under pressure for new technologies. And once you're up and running, you will develop new technologies around the existing technologies you have. So that's really the key to it.
Okay. So look, Joel, we've talked, Iggy's been quite clear and sort of honest about some of the pressures that he thinks about, at board meetings, no doubt, and all, in fact, every waking hour, I expect Iggy. But for you guys, your issue is kind of, I guess, a little bit of scale. You've kind of got a decent project there in Australia, but you could sell all of this tomorrow. So how do you go about taking advantage of that situation? Because once you're in with the OEMs, you prove that you can deliver technically and that you're a competent management team. it's a little bit easier for the next step if you can deliver more products. So how do you take advantage of that?
Well, that's a good question that we as you mentioned, are grappling with, and we're in a very similar stage, maybe slightly more down the road as Iggy, in the sense that we are now producing, at least from next week, we're producing our sample product and sending it out to our commercial partners for qualification. And Iggy's exactly right. We're the best position to be in is one where you can be developing this and commercializing it while qualification is going on. That's exactly what's going to be happening for us over the next year. And from what we understand, qualification programs have become much tighter in timelines, where it was sort of 18 to 24 months in the past. It's now closer to sort of 6 to 12, simply because of this rush. But for us, look, we only, our project is big enough in scale. It's not like we can simply double it. So for us, it's really what is the sort of next stage, because we do have this technology to produce these products from I guess, mineral deposits that have been perhaps overlooked, or even could come from waste products like tailings dams. Some of the tailings dams around Australia have higher grade cobalt than we do in our resource. So the next stage for us is to think about how to get that type of stuff to market, and that'll fit in really well with Europe. One of the main legislative components about batteries is I'll probably get the dates and the numbers wrong, but it's something like by 2028, or it might be 32, 14% of the components of battery must come from recycled material. And so for us, being able to go through and grab some of other mines' waste will likely qualify under that program. So there is large incentive for us to continue to develop beyond just the one mine that we're developing now.
So Iggy, you raised an interesting point there. Most companies follow a well-trodden path and process, and it's kind of almost like we've always done it this way, so we will continue to do it this way. You've had to think a little bit differently about how you approach the market, how you insert yourself into the market, and how you get those doors opened, because first mover advantage is essential. How do you see things progressing for your company over the next 12 months? In market conditions aside, because I think what we're saying is there's a massive ecosystem baying for, desperate to secure supply for the next 5-10 years. So what does it look like for your company going forward?
Yeah, good question. The analogy of where the products eventually end up, you need to have a vision of where the industry is going to. And I'll give you an example. I was from the lithium industry. I was one of the founding managing directors of Galaxy Resources, and we built the Mount Cattlin operation and the lithium carbonate plant in China. And this was maybe about 15 years ago. And when we designed the plant in China for the lithium carbonate, I had the vision that when this goes into batteries, they will require a higher grade than what's currently available. And in lithium carbonate was about 99.5%. And everyone said, the battery industry will just need 99.5%. And I thought, no, because if any impurity you introduce to the battery will impact on the life of the battery. So what we need to do is design a plan to make 99.9% purity that will then be required for the industry. At the time, the industry didn't even realize that they would require that, but it's logical sense. If you add more impurities to the battery, it will reduce the life of the battery. So we built this operation that was 99.9%. At the time, people said it wasn't required, but in the long run, it is now one of the top quality materials in the world, which all the top manufacturers are after. And so if you can see where the industry is moving to and get your product to meet that, you're in a great position. And the green part is just one of those elements.
That's really interesting. That's fascinating. Really fascinating. Joel, listening to what Iggy's saying there, I mean, what are the conversations going on for you about what the next 12, 18 months, and quite frankly, 5 years looks like? If you've got customers looking at 5 and 10 year horizons, don't you have to look at your company differently? Are you a cobalt company, or is there more to it?
No, that's a very good question. In the near term, we're just very focused on finishing up our demonstration plant and qualification, getting commercial partner and finishing up the DFS and getting funding, and off we go. But beyond that, no, certainly we want to be part of, in particular, the emergence of an Australian critical minerals and hopefully even a battery industry. Australia has all the key components of batteries, whether it comes from the nickel, the cobalt, the manganese. It's all here, and most of it's produced in a form of concentrate and shipped to China. What if we created an industrial hub somewhere like Western Australia, where most of these minerals are? We could certainly be a key part in that, and because we have technology to build refineries to make sulfate from cobalt or other minerals. So we are, and we're actually in conversations with Western Australian government and the future batteries industry who are thinking about this. This future batteries industry is already making what they call an indigenous Australian battery. We're providing the cobalt for that. And so we would just like to continue to be a part of that and help develop what could be a very interesting industry for Australia.
Is there, what other conversations are there? Because you're right, it seems like Australia kind of exports all of the commodities needed to build lots of different things from steel, coal, which we maybe are not allowed to talk about these days, and all the kind of battery metals as well. Are there kind of bigger conversations at government or state level around that? Is that moving forward in any way, shape, or form? I mean, either
Absolutely.
of you take that.
I'll let Iggy respond after me, but certainly, the Critical Minerals Initiative by the federal government that's handing out all sorts of grants and loans. We are shipping to one of those grants and potentially one of those loans in the future. That they really want to get these industries up and running, and we're in lots of bilateral conversations with key external partners such as South Korea, the United States, and Europe, who are interested in doing this same thing. So they're providing grants in forms of loans as well to key Australian companies. There's two that just received monies from the US, Lynas and Syrah, graphite and rare earths producer who are building facilities in the United States. So it's a global issue. And there's money and initiative behind it, and we expect to be a part of that in the future.
Totally agree, and it's good to see the Australian government moving down that line. When you are competing globally, and we've got a high purity alumina plant that we picked Malaysia to build, and the reason we picked Malaysia because it's of operating costs, and also that we get a 5 to 10 year tax free from the government. So we don't pay any corporate tax for 5 to 10 years. And when you're trying to make a decision, as you say, on behalf of your shareholders, that is a very attractive incentive. So my view is the Australian government is moving in the right way, but they really need to push much, much harder. When you got countries like that competing, build your plant here and we'll give you 10 years tax-free. Well, that makes it a pretty easy decision.
It does indeed. Well, gentlemen, let's wrap it up there. That's been a properly fascinating conversation today. So I'd say to listeners, viewers of this one, if you want to look at two companies who've looked at the market slightly differently and gone about it in a different way to their advantage and to the shareholders' advantage, please do have a look at Cobalt Blue and also Altech Chemicals, two companies we enjoy speaking to on a regular basis. Gentlemen, thank you very much.
Nice to see you again. All the best.